Isaac, let's kick off with a look at the market right now in light of the fact that we've seen interbank rates falling from around 16 to 18% in July to a level of around 7% right now. First off, what impact has that had on the equity market?
Well, I think it's probably increasing the confidence amongst investors, especially coming from an environment of very high interest rates for the greater part of the second half of last year. And now we've actually seen interest rates on interbank going down below the 10% range. So I think it's basically a plus for equities, especially when you throw in again the factor that inflation came down considerably. And in light of the recent further reduction in fuel prices, we should also expect inflation to continue falling. So I think with that combination, it's likely to throw in a lot of confidence as far as equity investments are concerned.
Of course, you refer to the ERC dropping fuel prices. What are your thoughts on the type of companies that are set to benefit the most from this? Which companies, have large fuel bills as a part of their overall expenses?
I would say in addition to the companies that are in transport business, the ones that are also likely to benefit the most are manufacturers, because by and large there's a component of electricity generation that relies on diesel. And for the greater part of last year, we saw oil prices going up because of the weaker shilling, and that really squeezed the profit margins of most manufacturers, as you've seen some of the results coming out. So I think a drop in fuel prices, and especially diesel, is going to be a very, very big plus for manufacturers because of reducing their electricity component, or rather electricity cost, and of course by extension cost of production. So it's going to be a big plus for them.
But certainly, Isaac, one would be watching that oil price right now, which is sitting at 3-month highs, and wondering when that might start impacting inflation. Of course, given the fact that Kenya are very reliant on oil imports.
Well, I think that's a major consideration, but I think what you also need to bear in fact is that the shilling has been relatively stable for the greater part of this year, as opposed to last year when we saw it drop to very unprecedented levels. So I think in addition, in as much as the fuel prices, or rather the international oil prices, have gone up, we don't expect the impact to be as significant as it was last year because of the major depreciation of the shilling.
Let's get into some stocks specific news. We've seen the likes of Nation Media Group and the Diamond Trust Bank moving quite a lot of volume on the announcement that they're launching this money transfer service. Can you give us shed some more light on that and what it means for these two companies? Because, of course, very interesting that the likes of Nation Media specifically diversifying its resource base.
I think more details are likely to come out, but I think for now that's really a pair to watch, especially when you consider the fact that they're actually targeting the market for the diaspora out there, and it's a huge market. I think last year there was about 86 billion shillings sent back home. And there's a feeling that most of the money actually finds its way through other channels other than official channels. And if there's a safer way of sending this money, then there's a high likelihood that the number of, or rather the amount of money being sent from outside might probably be even higher. So this is a very big plus for them. And of course, given that there are two big name corporations trusted by Kenyans abroad and very well known for that matter, then it's likely to play out very well and perhaps also grow their revenue streams quite significantly. So those are two very, very interesting stocks to watch.
What is your evaluation though? Because this is still a pilot project, and if you're looking at the core revenue line and lines of Nation Media right now, you've got the newspapers, so it's still print. You've got the online division, and then of course you've also got TV. They're moving into digital. I mean, what are your thoughts on the prospects for this company, especially in light of the fact that we all know that print is under pressure?
Well, you also need to throw in another very interesting development in addition to the current valuation, because I think on a 12-month trailing PE, it's trading at around 14 times earnings, which I think is more or less fair compared to other companies. Okay, there are companies which are trading at well below PE ratios of 5, for instance, of 10, for instance, like Diamond Trust Bank, which makes it quite attractive. But of course, on the side of Nation, there's the added effect of election spending. So as we move closer and closer towards the elections, it's expected that the advertising revenues are likely to also go up quite significantly. Also on the side of on the side of print and on the side of broadcasting as well. So when you throw all these things together, in addition to the new business they are getting into, I think you're probably likely to see forward earnings of something around, probably I would look at somewhere around 10 to 12, which I think would make it quite attractive given its growth prospects.
If we had to compare the likes of Nation Media versus another media stock like Scan Group, how would it weigh up? Because Scan Group posted earnings that weren't as strong as we have seen in previous years, 11% growth in pre-tax profit for the first half of the year, but they have been shown to be increasing their market share in advertising. That's according to Ipsos. So if you are getting exposure, I mean, do you like one over the other?
No, actually, interestingly, I would actually go for both. Main reason being because of, again, the election impact. Scan Group, again, is also expected to benefit significantly from election spend. And again, we have to bear in mind the fact that we've never had the scale of elections of this level. So in addition to, presidential, governor, and so on, there's going to be a lot of spending taking place at all these levels, county level, national level. This is unprecedented, and it's going to trickle down on companies that are media related, advertising related. So I would, in as much as Scan Group currently is making some investors a bit worried because of its high earnings multiple, I still think on a forward basis it's a good stock to get into.
So both stocks on your buy list right now, Isaac?
Well, those three,
yeah.
Scan Group, Diamond Trust, Nation Media, and I would probably throw in KCB and Equity Bank.
Well, that's a given, it seems, these days. Everyone's so bullish on that and those two stocks for some time. Isaac, thank you so much for joining us today. Isaac Njuguna, Head of Investments at Zimele Asset Management.